So while we can clearly see that the majority of these ETFs are closely bunched together, they are in fact all small cap ETFs, you also notice right in this range right here, quite a bit of a difference between the top tiers and the bottom tiers. Plus we have this ETF way down here radically underperforming the rest of them. What's up you guys? Welcome back to the Average Joe Investor channel. Today we're talking about small cap ETFs because while it might be popular and sexy to invest in the big, large, huge tech companies, the truth of the matter is some of the smaller companies here in America are still a massive part of the economy. And as we're going to see here in a moment, experience a radical amount of growth. In this video, I'll give you a brief overview of the 20 different small cap ETFs we tested. They happen to be the 20 largest small cap ETFs based on assets under management. We'll of course dive into the spreadsheet that I created where we look at historical performance over the past 5 years, 10 years, and 20 years. And at the end, of course, we'll have some key takeaways. I never want to waste you guys' time, and I always want to provide massive value every time you guys choose to watch a video. So with that being said, let's dive in. Okay, so we're looking at the spreadsheet that I created, the small cap ETF review, and we're looking, like I said, at the top 20 based on assets under management here. Let me go ahead and sort this. The top 20 small cap ETFs based on assets under management. We've got ETFs here from iShares, Vanguard, SPDR, Fidelity, ProShares, and Invesco. By far, you can see here the most popular based on assets under management is IJR, the iShares Core S&P Small Cap ETF with nearly $80 billion in assets under management, 612 holdings. And the nice thing is with the majority of these ETFs, we actually have quite a bit of history so we can test over the past 5 years, 10 years, and 20 years, both on income generated as well as net asset value and total returns. All of the data down here, including the charts, all the data right down here in these following tabs is all of the price and dividend history over the past 15 to 20 years, depending on how long they've been in existence. All of the historical stock price and dividend history came from stockanalysis.com. We got the history right down here that I was able to download. And of course, to make sure I had all of the correct dividend information, including adjusted dividends based on any stock splits, I utilized seekingalpha.com, where I captured all of that data right down here. Here are a few other assumptions we made when we look at the historical data. Regardless if it was 5 years, 10 years, or 20 years, as we can see right here. Actually, let me scroll to the top here. At the top, you'll notice that with all of these, we did a assumption of a $100,000 lump sum contribution at the beginning of the period, whether it's 10 years, or whether it's 5 years, or 20 years right here. And throughout this time frame, regardless of that time frame, we do not make any additional contributions. So $100,000 invested at the beginning, keeping track of dividends as well as capital value. We scroll all the way down. You can see in this section right here, you can see at the end, you've got portfolio balance at the end, you've got total distributions, total shares owned. And then of course, we'll look at some charts along the way. So before we dive into the actual results here, you'll notice that of these 20, we had one from Fidelity, but the problem with Fidelity is even though it shows an inception of 2007, when I looked at multiple sites, I wasn't able to get any historical data beyond 2023. So unfortunately, even though it has 2007 here, we weren't able to actually use this fund. So I would encourage you, if you're interested in learning more about the Fidelity Enhanced Small Cap ETF, you're welcome to go take a look more online. Then we had two from Invesco, right here, the Small Cap 600 Pure Growth and Pure Value. 1, 2, 3, 4 from iShares. We had the Russell 2000, the Small Cap, and the Small Cap 600. Well, more about that in just a second. We'll talk about the difference between the Small Cap 600 and the Russell 2000. We also got from ProShares 1, 2, 3 ETFs here. The Russell 2000, Small Cap 600, and another Ultra Pro Russell 2000. Then we have from SPDR 1, 2, 3, and then from Vanguard, we actually had the most 1, 2, 3, 4, 5, 6, 7. And you'll also see with Vanguard quite a bit of assets under management across these. Now, I think that the majority of investors out there would say, okay, small cap investing means investing in smaller stocks. But within that category, we have a few different indexes that we can look at. The most popular by far is the Russell 2000. However, there's another called the S&P Small Cap 600. So what's the difference? This is from therobusttrader.com. Had a really good breakdown here. Which is better, S&P 600 or the Russell 2000? And you'll notice that here's the breakdown here by composition. The S&P 600 is made up of the 600 small cap stocks and is weighted by market cap. This means that the index is composed of the 600 smallest stocks listed on the S&P index, and the weight of each is determined by its market value. Now you compare that to the Russell 2000 here. It's comprised of 2,000 small cap stocks and is weighted by a combination of market cap and fundamental factors. It's composed of the 2,000 smallest stocks listed on the Russell Index, and the weight of each is determined by market value as well as its fundamental characteristics. So when we think about the difference between the Russell 2000 and the S&P Small Cap 600, what we have is 600 stocks, not 2,000, and it's also the smallest 600 versus the smallest 2,000. Within the context of the Russell Index, we think of the Russell 3000 as the 3,000 largest stocks, the Russell 1000 is the biggest ones, right? And then the Russell 2000 is the next 2,000 smallest stocks, whereas the S&P 600 are the 600 smallest stocks. So we clearly have a more focused and concentrated index with 600 versus 2,000, but also we have 600 of the smallest versus the 2,000. So you really have a bigger concentration of small cap stocks. And this is from S&P Global or indexologyblog.com. We scroll down here, they talk about the differences between these indexes. And one of the things they called out here, which we're actually going to see on some level in this analysis, if you look down here, it says since its launch in 1994, the S&P Small Cap 600 has outperformed the Russell 2000 in 14 of 21 calendar years. And what's interesting here is the S&P Small Cap 600, despite being only 600 and being smaller, has exhibited lower volatility than the Russell 2000 historically. Okay, so now that we understand that, let's take a look at the actual results here. You'll notice as we compare these different results, we've got a mixture of small cap 600s as well as Russell 2000s. Additionally, let me just sort this right, largest to smallest. You'll also notice here that within the buckets of small cap 600 and Russell 2000, you have small cap growth versus small cap value. So what is the difference between small cap growth versus small cap value? Small cap value stocks are ones that tend to be undervalued based on their fundamentals, which means based on the numbers on the spreadsheet, the company should be worth more based on its stock price than it actually is. Therefore, it is a good value right now. Contrast that with small cap growth or large cap growth, but growth versus value. Growth means these companies are expected to grow their earnings in multiples in the future. So again, here we've got Vanguard Small Cap 600 value versus growth. Then we've also got Vanguard, just the S&P. Then we've got the Russell 2000 ETF. Then we've got blends of just small cap value, small cap growth, lots of different variations here. But let's look at the actual results. So we're going to start with, again, we're looking here at 5 years, 10 years, and 20 years. We've got it broken down based on income earned, the net asset value change in the investment, assuming we start with $100,000 at the beginning of the period, and then the total return is just a adding together of the income and the net asset value. All right, so we'll go ahead and start with, like I said, 5-year returns starting in January of 2020 through December of 2024. Now, based on income here, the top result for income was right here, the Vanguard Small Cap Value ETF. And I think it's fair to say that when it comes to income, you're going to see more income from small cap value as opposed to small cap growth. Top result here was from VBR. Worst result was from, down here, ProShares Ultra Pro Russell 2000. And you'll notice that all of the top stocks in the income section are value. Right here, we've got small cap value, S&P 600 small cap value, small cap value, small cap, just a general small cap, then small cap value. And then all of the growth ones are near the bottom, which is what we would expect. From a net asset value perspective, though, top result here is RZV, the Invesco S&P Small Cap 600 Pure Value ETF, which is fascinating. You would expect it to be growth, but it's actually value. And again, this is only a 5-year time frame, so keep that in mind. But we've also got VB, VBR, and VBK from Vanguard here, all at the top results here, worth 160, 144, 144, 140. Then we've got all the growth funds here, 139, 139, 139. Small cap, a general blend here, 139. At the bottom here, we've got these two funds from ProShares. We've got the Ultra Russell 2000 and the Ultra Pro Russell 2000 worth far less. This is the massive outlier right here, worth only $57,000. And you notice here, here's the big reason why this fund, the ProShares URTY Ultra Pro Russell 2000 ETF, is performing so poorly. It's leveraged. It seeks daily investment returns or results before fees and expenses that correspond to 3x the daily performance. So 3x growth, yes, but 3x negative as well. As it says down here, magnified gains and magnified losses. And then from a total return standpoint here, you'll notice that the top result by far 100% is RZV from Invesco, the Small Cap 600 Pure Value ETF, which only has 149 holdings and radically overperformed against VBR, VB, VIOO, and SPSM. Though there was quite a few clustered here at 147 to like 144, 143. Most of these being value. The top results, a mixture here of growth and value. Now that's just the 5-year return. And let's go ahead and take a look at the chart for the 5-year. So quite a few different stocks here, a lot of them together here, especially right during this time frame here in 2021 through the end of 2021, very close together, very clustered. But then you can see that Ultra Pro one down here, just terrible performance, underperforming the rest of them. And then in this cream colored right here, this is RZV, which is the winner, outperforming throughout the entire time frame just about. Some of the lower hanging ETFs down here, we've got UWM, and then this light purple here, SAA, and then down here in this yellow or orange, RZG. But RZV was the top result, followed by VBR from Vanguard. Let's move on to 10-year returns here, because obviously when we're talking about these large sector or large index funds, we want to have long historical results to know what performed over the past 5 years, of course, but also what performed over the past 10 years, and then 20 years and beyond potentially. So over the 10-year return here, we're going to go ahead and close up 5-year. 10-year results here. Top result for income over the past 10 years was by far VBR from Vanguard, which is small cap value. Okay, $26,000 for income. All the value ones are going to be down here all the way through. I mean, the first growth is right down here at 13 at 16,000. All these are blend of growth and value or value. Worst result here was Ultra Pro Russell 2000 at 2694. Ultra Russell 2000 here 5577, and Ultra Small Cap 600 from ProShares. Now, if we sort by net asset value, which is what we're primarily concerned with, top result here was ProShares Ultra Small Cap 600, 608 positions at 233, followed by VIOG, which is the growth ETFs. This is now we're seeing over past 10 years where growth overperformed. VIOG, VBK, IJT, then VIOO and VB, which are blended ETFs between growth and value. Then we've got SLYG, which is growth. Then we've got the small cap ETF down here. What you'll notice here is that the Russell 2000 IWM or the Ultra Russell 2000 here, UWM, all these Russell 2000, even here VTWO from Vanguard, they're underperforming based on total returns. I mean, primarily net asset value, but also total returns. Whereas the small cap 600 seems to be doing a lot better. And then again, from total return standpoint, let's go ahead and sort by that. Top result, SAA from ProShares, the Ultra Small Cap 600. Then we've got small cap 600 growth, small cap 600 growth, small cap growth, small cap 600, small cap, small cap, small cap growth. Then we have our first small cap value here, VBR. Then we've got some more 600, 600, 600. From a Russell 2000 standpoint, it underperforms over the past 5 years and the past 10 years. So let's go ahead and move on to the 20-year return here. This is where we have quite a bit of a gap here that starts to form between these different ETFs. And it's also where we only have 9 of the ETFs instead of 20 of them, just because we don't have that full 20-year history. But the key things you want to look for here is what is the difference between the small cap 600 and the Russell 2000, if any? And also, where do we see the differences between small cap growth versus small cap value? Okay, first off, we're looking at income here. Top result here by far was VBR, which is small cap value from Vanguard, 77,000, followed by Vanguard small cap VB at 64. iShares core S&P small cap 63. Then we've got small cap value, then finally the Russell 2000 down here. Now, from a net asset value standpoint, this is where we see some radical changes. Top result here for net asset value by far, VBK, which is Vanguard small cap growth, at 528. Then iShares S&P Small Cap 600 growth, S&P 600 Small Cap growth again from iShares and SPDR. Then Vanguard Small Cap, which is a blend. Then S&P Small Cap blend here from iShares, 435, 432. From 432 down to 362. Small Cap 600 value at 362. Russell 2000 at 345. Small Cap value at 345. And then small cap value at 295. And if we change it over to total returns, top result here, VBK at 562, followed closely behind small cap 600 growth, IJT at 559, small cap growth, small cap 600 here, 533, then 499, 495, and then a big gap down here to 422 for small cap value, then small cap value, Russell 2000 at 395, and then small cap value at 356. Let's take a look at the chart here for the 20, and it's admittedly going to be a little bit convoluted here, kind of hard to see, but you'll notice that for the most part, a lot of these were close together for the majority of this time. We start to see a little bit of separation here in 2014, 2015, 2016. Up here to 2019, we have our big drop down due to COVID and a pop back up, and that's where this pink line right here really starts to outperform. VBK from Vanguard really outperforms the rest of them, followed lightly behind green, which is IJT, also a growth small cap growth. And really the underperformers down here in purple, we had SLYV down here, also in yellow, IWM. Okay, so key takeaways here. What are the big key takeaways based on historical results? Again, as a reminder, historical results do not necessarily translate to future returns. You can't just assume that because small cap growth has outperformed in the past, that small cap growth is going to outperform in the future. Could be that we swing towards value. But one thing I think we can take away here is if we're thinking about small caps, if we're trying to diversify a portfolio outside of just large cap, big, huge companies from the NASDAQ 100 or the S&P 500, if we're thinking we want to be invested in the small cap, the smaller companies, what is clear there is that it seems to me that the S&P Small Cap 600 appears to be a much better solution than the Russell 2000, again, based on historical results. Better returns, and as they said in a few other articles, less volatility. Anytime you can get better returns and less volatility, that's a win in my book. Now, when it comes to choosing growth versus value within the small cap or large cap sector, in my opinion, it's really tough to know because at times they can swing from left to right. We can sometimes be into growth, sometimes be into value. And so in my opinion here, I like the idea of just being in the general index or being in a blend. So you see that with Vanguard, they've got the growth, value, and then a blend of the two. You've got just this general S&P Small Cap 600 index. Both of these seem like better options to me to get better a blend between the two, and that way any swings between growth and value are not going to impact your portfolio too significantly. At the end of the day, this is not investment recommendations or advice of any kind. We're just trying to take a deep dive look at small cap in general, because small cap is a huge part of the stock market and should be in most, if not all, portfolios in some way, shape, or form. How you do it, what makes the most sense for you, what your specific risk tolerance level is, how much you want to be invested in equities versus bonds, etc. All of that goes into what decision you make. If you want to get access to this spreadsheet, you can join the Average Joe Investor Patreon community. There's also a link to purchase this spreadsheet if you wish to do so. Joining the Average Joe Investor Patreon community is a ton of value though. You can get access to all the spreadsheets, access to an amazing DIY investor community, access to me via daily office hours that we hold where I trade my portfolio and ask any questions or concerns you may have. Tons of value there. If you're interested, check out the link down in the description below. Also, make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of those comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.